morning, all. How are we all doing? Good morning, Amy, Ian, Joe, Kennedy, JC, Monkey, Peter, Novelty, Gregors, Danny, Mark, Virginia, Evil, and Flav. How are we doing? We've had the New Zealand news overnight. Quite a big news day today, so going to be lots going on. So just about to get out of the euro US dollar. I've banked 0.67%. I'll go through the accounts in a minute, actually. Yeah, and have a look at what I'm banking, what I've got trailing, what's going on. Actually, I don't want to get out of the euro US dollar yet, do I? Euro news this morning. Want to get out of that? Maybe I don't. Hold on a minute. Let me close that one. Cancel that. Close half. Right. Sorry. On the honest there. So we had the interest rates for New Zealand overnight, which was 5.5 forecast. Spot on forecast. Well done, New Zealand. So that gives us not bullish, not bearish for the New Zealand dollar. So the inflation drop is 0.9, which is very good, very fast. So it's coming down very quick. The Australian, I would imagine, will fall very much in line with that when we get that number coming out as well. So this is good. Inflation's dropping, which means that it's good for these interest rate drops, which is good for the economy, etc. But obviously bad for the currency itself when it happens. So it was an as expected news event. So that means basically it's not bullish, it's not bearish, and the market will basically just do whatever the hell it wants to do or needs to do based on its books. So as you can see with the New Zealand dollar, there's not an awful lot of movement happened off of that. We've had a bit of a drop against, well, actually the yen's powering up, so that's why that's dropped. But we've had a bit of a bull run on the New Zealand US, but it's ever so slightly bullish. Aussie dollar's gone absolutely nowhere on it. So didn't get any reaction because obviously there was no deviation. So there was no surprise. Therefore, the market has no shock. So there's no ADRs to look at this morning. We haven't had anything that's extended beyond normal ranges. Nothing's hit its weeklies yet. We're on Wednesday. So nothing's got there yet. And RSIs are totally flat. So no movement really to talk about at the moment. All the setups that we've had are all starting to play out, which is why the RSIs are flat. We had all those RSI extensions, which gets us into the trades, and then the RSIs become unextended, which gets us out the trades. So everything's just kind of working, which is all good. Overnight news, we've just had the Bank of China Governor Pan announcing some information. Reserve required ratio by 0.5. Don't know. Anyway, it doesn't affect us because it's China. Other than that, there is no other news overnight that's really impactful. We've had Japanese trade balance and import, export, etc. But there's nothing else overnight that's happened of any interest. The entire world is ganging up on the Houthi rebels in Yemen, so they'll be squashed very soon. So yeah, nothing else exciting there at all. Yesterday, fairly decent day for the indices, banked 1.5%. Nice break on nice hedges, basically. No, hang on, what was it yesterday? I can't remember what happened yesterday. Yeah, hedge on the DAX. FTSE was a clean break. NASDAQ was a clean break down to target. There was no trades on the Dow. And the S&P got hedged and I couldn't get out. So this is annoying, really annoying, because this is what I said yesterday, didn't I? I said, look for the bounce off of that low, which was yesterday's low, previous day's low there. And it did it. And I saw it. And I was like, shall I? But it was literally 1R. That was it. That was 1R. And I thought, it's just too close. If it does decide it wants to tank today, that's far too early to get out. It's going to rehedge. It's going to cost all my profit from the morning. So I didn't take it. Should have done. It was absolutely the right thing to do, take the bottom bounce, but didn't take it. You can't even see that. It's behind my head. But trust me, yesterday's low is there. Previous day's low. So, yeah, I got out with a hedge loss on it. Couldn't get out of it yesterday. But if you did take the bounce yesterday, which is what I kind of said to look for as an alternative to the drop, well done. You got out. I didn't. So this morning, we've had a bit of a rally on the DAX. We've had a bit of a rally on the FTSE pre-market. It's earnings fortnight officially kicking off today. Not that one. The aftermarket yesterday was Netflix and Visa. Which we don't appear to have. Oh, yeah, Netflix adds 13.1 million subscribers. Bloody hell. 13 million. Tops revenue estimates. So NASDAQ up. 1 minute to the open. So NASDAQ rallying this morning. We've got 45 seconds. So we've got loads of earnings starting to rally now. This week's actually not the biggest week. It really kicks off properly next week, doesn't it, when you look at it? But there's big names this week. Netflix last night. We've got AT&T pre-market today. We've got an IBM and Tesla this afternoon aftermarket. So there's going to be more volatility coming into the markets. Yesterday was very, very flat, as we know. So hopefully it all kicks off there, which will be good. Right. So let's just watch the open. Then we'll have a look at the FX side of things and see where we're going on that. It's quite a lot banked, quite a lot moving. So we'll have a good look through all of that. DAX is opened long. So we got a whacking great gap today to the downside on the DAX. We've got a bit of a small gap on the FTSE as well. But market's rallying at the open. Off we go to the upside. So long both. So yeah, big, strong move. So yesterday we put a bull day in, ever so slightly. It was actually a bear day on the. It's basically, it's a doji, isn't it? Yesterday, across both really. That's kind of a spinning top. So no moves yesterday. The market didn't want to go long, didn't want to go short. We just sat in accumulation yesterday. And that's the third day now on the FTSE. Pretty much exactly the same price action every day, look. Yeah, push, pull, back to square one. Yeah, so not going anywhere, this market. Very tricky at the moment. Everything's very tricky at the moment. Trading is different. Morning, day trader. Morning, Rico. So not a lot of volume. So news today, 8:15, we have the French PMIs. Oh, crap. Yeah, we're not going to get a lot of movement this morning because we're waiting for the PMI figures. That's not good. Shouldn't really. The best thing to do today is wait until 8:30. So a bit late now, but 8:15 we've got the PMIs. 8:30 we've got the German. So we've got the French and the German. Those two make up 80% of the figures for Europe. So that number there is orange because it really doesn't matter, because once you know that and that, it's that. So whatever happens with these will be bullish or bearish for the euro, or neutral, obviously. So whatever happens with those, if it's a bullish euro announcement, we'll get the indices drop. If it's bearish, we'll get the indices rally. Then we've got the pound at 9:30, so an hour and a half. So looking at the FTSE, obviously we have that line at an hour and a half in the future, which is there. That's when the news is coming out for the FTSE. So we may well just sit in rotation until we get that news, and then that will obviously take off as well. But the FTSE would generally tend to move with the DAX off the European news a lot of the time as well. So a lot of news coming out this morning. So we got pound, we've got euro this morning, and then this afternoon at 2:45, which is 15 minutes after the open this afternoon, we've got the US PMIs and the Canadian interest rates. So it's going to be a very, very tricky day for indices. In fact, today is one of those days where I'd probably say just don't trade indices, because the opens are likely just to wait for the news, which means whipsaw, which means hedge. Not the end of the world, because obviously we know we can get out of hedges, but just makes life a little bit more tricky when you pretty much guaranteed you're not going to get a rally at the open. So, but DAX proved me wrong so far this morning. So carry on DAX. If you can get there by 8:15, that would be lovely. Then we'll see where we go. But yeah, going to be a tricky one today. So lots of news. Canadian dollar interest rate, not going to change. Very, very, very unlikely we'll get anything different than a 5, which is a forecast. And then it's the press conference, which is going to move it. So 3:30 is when the real news is today. That interest rate, monetary policy statement, and the rate statement. Unless there's something really dramatic in there, which is a kind of almost guaranteed this is what's happening in the future type thing, we need to wait for the press conference. And that's when we find out what the forward guidance is for the next quarter. So 3:30 is when we'll really get that move starting off the CAD. The US will probably have a move off that PMI, but again, it's likely to wait for the Canadian, because the Canadian news affects the US and vice versa. So it's all in one big pot. So loads and loads of volatility today. And then tomorrow, we've got the same with the euro rates and the ECB press conference. So it's a busy week. Busy day tomorrow, busy day today. No movement yet. Wait for the initial cash balance to go in now. So there's your 5-minute opening ranges. So if you're taking the 5-minute ORBs, you are long, maybe long FTSE. Just sitting there on the DAX at the minute. Be nice if we can get a rally on both of these up to target. If we can just get to target before 8:15, that would be phenomenal. And if we are close to target 8:15, I'm taking it. In fact, if I can get a 1 hour out of this, 1.5 hour-ish, grab it ahead of the news, I would, just in case. Better to be out than to be hedged. Morning. I can't say your name. Ovunk. Looks like to me. I don't know what umlauts are and how to pronounce things like that. So, morning anyway. Airy Forex. Purchased 4 indicators for MT4 today. All are working great as supposed to, except for the Trade Manager dashboard. Can you show me your settings? Well, there aren't any settings. It's just, I mean, there's not really a lot to show with that. You input your starting balance, and then you set up the alerts as you want them. I turn them all off, but not really a lot to show on that. It just works. I mean, it's all it does is it reads your account history. So if it's not working and you've got nothing in here, for example, it's because your account history hasn't got any account history in it. Other than that, this will show. I mean, there isn't not really any settings, is what it is. But she's putting back. So FTSE upside, obviously, we've got this accumulation here to the upside, that propulsion move, which started to drop, which we might find some resistance at today. Upside on the DAX is pretty unlimited today. Until we get to ADR, which is that high, so that is the 2-week high. ADR, which happens to be 5R to the upside, which is good. And failing that, it's 175 ADR to the previous week. So lots of room to the upside on both today. I know my name is not for Europeans. Yeah. I can call you Alan Bay. That's what the surname looks like. No volume today, is there? So we're inside bar on the DAX. We've got 1 minute 30 left. Looks, I mean, we've just put our wick outside the highs there. In fact, is that a double top? Not quite. So literally the wick's just outside the highs on the FTSE, and we're inside bar. We've got tweezer tops inside bar on the DAX. 1 minute to go. So no volume today. Could be a whipsaw. It is. Deal with it. Nothing we can do. If it is the DAX specifically, if the DAX gets hedged today, it's a pretty simple gap fill to the downside and 2 week high ADR to the upside. So fairly straightforward on both of those. However, because it's news, if we get a big deviation on the PMIs, we could get an easy 150 ADR or so. If the euro drops dramatically, this could easily go way beyond ADR today. So we might want to target that 175 level to the upside, but we'll wait and see what happens when the PMIs come out at 8:15. We've got another 5 minutes. 14 seconds on this candle. They're both inside bars, so no volume, no follow through. Right, I'm going to quickly run through FX. So there's nothing to look at from an ADR, nothing to look at from RSIs. We're totally flat. Banked yesterday a very small amount. I banked yesterday the New Zealand yen. So took that one off yesterday just before the close because it was in profit. And I just wanted to bank something, and it was New Zealand dollar news. So obviously what I didn't want to do is have some kind of really bad New Zealand news and obviously not have the ability to bank it. If it's great news, fine. I've got other New Zealand exposure on. But I just wanted to get something out and something in the bank. There's nothing bankable at the moment. The pound yen hasn't gone anywhere since I took that aggressive drawdown control position on Friday last week. It literally dropped and we've sat there. We're on day, I mean, if you really look at this, we're on day 5 of this accumulation. And I'm just looking for an ADR. I just want an ADR. Just drop by an ADR. That's all I want. It's just not moving. So drawdown's all right. Pound yen is the only thing that's slightly worrying, which is why I've got the aggressive on it, which is a 2.6. US dollar yen is at 2.2, which is coming down nicely again. It's day 5 sideways, so nothing exciting happening there. So nothing much to look at on H1M5. Bank 2.8 on the month, which is crap, but January's been crap. So that's that one. ADR reversals, banked 1.13% yesterday, banked 1.36 so far today. I've got that, which is going to bank US dollar yen. Look at this for a reversal alert, yeah? So this is an ADR reversal, obviously, this account. ADR reversal. Beautiful. So I'm trailing that. Why not? So I've got a trailer on it, I think of whatever I've got a trailer on. Got a trailer of 16 points, 16 pips. So just trailing that, and I'll get out of that when I get out of that. And so far today, I've banked US dollar CAD. No, I haven't. That's the wrong way around. I've banked euro US dollar. So that's one I've just banked. That was in profit overall on the position. But I'm going to bank that one because we've come into accumulation. In case we drop, we've got US dollar and euro news coming out today. So there's no point in chancing that. If that happens, I want that in the bank because obviously no point in just letting it run. So if it rallies, fantastic. That position will come off up in that propulsion gap. So bank that. I bank New Zealand dollar, US dollar. Nice, easy. That one out there. I'm holding that one. In fact, I might put the TP up on that now. Actually, just move it back up to there. So I've got one still running on that. Should really shut that out. What is it? 0.16. I'll let it run for a minute. Aussie dollar, New Zealand dollar out. Yeah, ADR reversal. So there's your ADR hit. There's an entry there. There's a second ADR hit there. I got out of those two. I still have that one on. So I'll be adding another position on unless it comes down. And if it comes down, obviously, I'm just going to get out of that one. Pound US dollar was banked yesterday. So that was all banked yesterday. So 5.4% banked on that, sitting in 4% of DD, using 1 minute. Nothing banked on H1M5, on H1 hedging. That's up 5.8 on the month and banked 1.6 yesterday, sitting in 2.4. So yeah, it's all fine. So everything going well. Okay, so market's stuck. We've got 30 seconds to news. So we just watched this news. Watch Euro US. Give us an idea what's happening with the euro on the news. Nice big spread going in. I'll have a look at the chat in a minute. Okay, news is out. Doesn't seem to be a lot off the French. So far looking negative euro. Actually looking at anything, is it? It's mixed. So positive manufacturing, negative services. It's a 0.1 and a 0.1. So it's less than a 0.1. So there's no deviation. So that's why we've got no movement. So we're waiting for the German now at 1/2 So we got 15 minutes to see if we can get some kind of move. See where we go from there. 83 people in here. I'm going to give you 10 seconds and I'm going to slowly go over to the YouTube channel and I'm going to see how many thumbs up there are. There's 83 people in here. There should be at least 40 odd thumbs up by now. Going very slow, just giving you a little opportunity to hit the little thumbs up before I get there. 32, that's not enough. Sad face. Most people don't like me. Going anywhere are we at the minute? Vantage Corp. Can this breakout strategy work on the NAS and the ES? Yes, I trade that. There you go. NAS, S&P, and the Dow. I trade all of them. All three of those. But you trade those in the afternoon. You don't trade them in the morning because this moves in the afternoon. European markets move in the morning. US markets move in the afternoon. So yeah, works absolutely fine. NASDAQ, anything, any index, basically. Opening range breakout strategy or stock index hedge strategy, which is just a variation of the opening range breakout strategy. They all work on all indices. And the edge is that you know when the move is coming. Yeah, it's the one instrument, the one strategy on the planet where we know when the market is going to move. We just don't know which direction, but at least there's two things you need in trading to get a successful trade. You need to be able to pick the reversal point or pick the breakout point, and you need to pick when that is going to happen. We don't know either of those because we can't see into the future. With this strategy, at least we have one of those things ticked. We know when it's happening. We just don't know which way. So you go with the momentum. That's what the breakout strategy is all about. So yeah, any index that has an open, which they all do, you can trade. Up to you which you trade. I trade 5 at the moment. But I fall out of love with them on a regular basis because sometimes they work, sometimes they don't. But that's trading. DAX is out the highs. So we got a chance of getting 2R on the DAX. Be nice if we can get there by 1/2 past. Do you usually use the hedge strategy or ADR strategy? Both. What do you recommend for the 4 settings you provided? Don't understand the question. Talking about the bootcamp about position trading. Trade whatever strategies you want. They're all position trading. Entirely up to you. They all work because they're all position trading. So pick whatever you want. So this account here is H1M5 mean reversion. So it's trading H1 RSI extensions on the 21, and it's taking 5-minute reversal alerts. Scaling in 3/4 of an ADR apart using 0.1% risk over half an ADR. This is ADR reversals using 125 extensions on ADR. Half an ADR scaling, 0.2% risk over half an ADR. This is H1 hedging, half an ADR scaling, 0.2% risk over half an ADR. And this literally just takes every single reversal that happens in the market on the hourly time frame. No RSI, no filter. It's not using a condition indicator. It's just getting into market movement. But at the end of the day, they're all position trading. So if that trade works, great. If that trade doesn't work, we change our entry price and we wait for the market to undo the move that got us into the drawdown. All the same strategy. Position trading is position trading. How you get in is irrelevant. You can get in on a Bollinger Band extension and moving average crossover. You could get in on CCI, MACD. You pick an indicator. All you need is a condition indicator and a signal indicator. When the condition is met and the signal triggers, you enter the market. It either goes your way and you get out, or it goes against you and you turn it into a position trade and you adjust your entry as the drawdown builds. Then you get out when the banks undo that move. Doesn't matter how you get in. This is why I give you 4 strategies in position trading, most of them based around RSI or extension, which is ADR, because that's what I use. That's what I like, and that's what I've settled on as me, as a human being. You as a human being might be in love with the Bollinger Bands and have been using them for 2 years, but have hit and miss. So carry on doing exactly what you're doing. Just remove the stop loss and scale in to drawdown. Same thing. Every time you hit that button, there's a 50-50 shot of up or down. It's going to move through time, and it's going to move up or it's going to move down. You don't know how long it's going to take for it to move up or down, and you don't know whether it's going to move up or down. You're in. That's it. There's only 3 constants in trading: up, down, and sideways. Those are the only 3 things that happen in trading. The market goes up, the market goes down, and it moves through time. Apart from that, we have no idea what's going to happen. So how you get in, which of these indicators that they provide you with, or whichever ones you purchase, whatever you do, don't affect your trading outcome. What affects your trading outcome is when you exit. So the reason I've got that profit on the ADR reversals today is because the market's moved in my direction. Nothing to do with me. No skill involved in it, is there? I got into the US dollar yen yesterday, and the market came down. So I'm getting out. If the market had gone up, I would have waited until it had moved half an ADR against my position, and then I was scaled in with a new entry when the reversal alert happened. That movement has nothing to do with me. That entry there is nothing to do with skill. It's just a condition in the market that I've identified that often results in a reversal. But whether it does or not, it's nothing to do with me. I can't control it. So if you want to use, and again, we have this debate at the moment in Telegram about I mean, it's not a debate, it's just whether you use the 14 or the 21 RSI. The difference is when you get in. Yeah. So this is the 21 RSI on the hourly. So you got an entry there, 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 and there, and there. Yeah. So if you change it to the 14, you would have also got into the market there. Wouldn't have worked, but you'd have got in, got out. So you would have just got in one trade earlier than if you were using the 21. You would have also got in, you could just about see that one, you'd have got in there on that. I missed it because I'm using a 21. If you're using a 14, good for you. Other times, you would get in on a 14 earlier than me. Sometimes it would be bad for you to get in on a 14 and you should have waited for the 21. Which is right? Both. Sometimes the 21's right, sometimes the 14's right. Which is best? Sometimes the 21's right, best, sometimes the 14's best. There is no best, there's different. The entry is different on a 14 and a 21 RSI. Whether it's good or not has got nothing to do with the 14 or the 21 RSI. Whether it's good or not is whether the market decides to drop after you enter on that signal or condition. But it really just doesn't matter. You have to have a strategy that you follow consistently, but that's literally it. My cough has gone. No, it hasn't. You did that. That was your fault. My cough has not gone. It's stuck. It's still there. I'm. I would say I'm probably 30 days in, and it's a 100-day cough. They call it, don't they? Lasts about 3 months. So annoying. Yesterday, Euro US dollar dropped to 175 ADR without any news. Yeah, so that would have been the market just exiting positions, basically ready for the news. So we have got news today. So if you've got a ton of positions on the euro, which are in loads and loads of profit, you want to get out of them before potential volatility gets rid of your profit. So the market will move quite often before a news event, and it's just positioning for the news event. And it's either positioning in speculation of the news, or it's positioning to exit positions ready for the news. Sometimes it does, sometimes it doesn't. But that was just a normal move. But you know, look at the euro US dollar. Yeah, that was the HY. That was the ADR reversal yesterday. Look, so that was your trade yesterday. I'm out. Job done. Look, there's a reversal alert. There's the retest. There's the W. Thank you very much. I've still got one on though. So basically, this one I'm leaving on. I'll add it back on again if it drops. If it pushes, it'll be coming off. There. Potion. 3 minutes to go. Hedged on the FTSE. DAX is rolling over. A lot of rejection. Rejection at the highs, but whether or not that is actually rejection or whether it's just the market not wanting to move yet, we'll have to wait and see. If we get a mixed bag on the German numbers, which will probably go nowhere, but we should hopefully get some movement when we get these numbers coming in, either because the numbers have made the market move or because the market moves now because it knows the numbers. But we'll see. 3 minutes. Gregor's liked 32. Let me refresh. Sometimes it doesn't update, does it? 48. That's better. Look, there's 92 people in there. Roughly half of you like me. That's good. Always good. Morning, Neo. Morning, Evans. Morning, Greg. Purchased almost all your indicators. Well done. Good man. Thank you. Thinking of starting to trade index. Yeah. So if you want to learn the ORB strategy is on the website. So go and watch all the content on the ORB strategy first. Understand the edge, understand the strategy. And then you've got a choice of either using, I mean, if you want it manually, you can trade it manually. It's just quite tricky to trade manually because you've got to be very quick with the buttons at the open because obviously it's very quick. But you've got the option of the opening range breakout EA, which is the stop loss based version of the strategy, or the SIH, which is the hedging based version of the strategy. So the SIH is a slight variation in that it does more dynamic calculations of the pre-market range. The ORB, you have to set the pre-market range you want to trade. But they're both pretty much the same. We're waiting for that breakout at the open. And if it happens, brilliant. If it doesn't, you either get stopped out and you flip and reverse, or you hedge and wait. Up to you. Depends how the market. It's up to you as a trader. Some people don't mind getting stopped out all the time and can control their emotions. Others, it drives them mental and they go crazy. In which case, SIH is the better strategy because I'm hedged on the FTSE now, so that's it for me on the FTSE. I'm done. So my choice and my job now is right. Where are we going on the FTSE? So I'm going to target yesterday's low. And hopefully we can get a bounce off of yesterday's low to the upside. I'm going to target ADR because I suspect that we will get a bounce out of this area here. Yeah, so that's it. So now I just sit and wait. That's my job. But what I'm not going to do is overtrade because I'm in a trade. I'm now waiting for this trade to play out. If this trade takes 6 hours to play out, it takes 6 hours to play out. If it gets to the end of today and we are just going sideways like that, I close it out with $160 of loss. But that's it. I only take one trade. That's the difference. The main difference between SIH and ORB. ORB, you can take 20 trades. If ORB here, for example, if you took that pre-market range, yeah, you went long, you had a stop loss there, it pushed back down, it stopped you out. You're negative 1R, and now you are short. If it now pushes up and stops you out there, you are negative 2R, and you will flip long. If it then pushes down and stops you out there, you go short, and you'll be negative 3R. This is the problem with breakout strategies. There is no solution for it. A breakout strategy is a breakout strategy. If it goes into a range all day long, you could get broken 10 times, couldn't you? So that's the downside to the ORB. The upside to the ORB is it goes like that, you win. Same with the SIH. If the ORB goes like that, and then drops down to 5R, the advantage of the ORB is you are plus 4R on one stop out and one break. With SIH, you are only in one trade and you're in a hedge loss. That's the downside to SIH. Yeah, every strategy on the planet has an upside and a downside because none of them work all the time. You just have to pick the one that suits you as a trader, which you won't know until you either try them or you can pick the one that you know that clicks with you. Neutral again. So German manufacturing positive, services negative. We are 1.5 differential south on that, and about 1.5 differential plus and minus. So it's totally neutral. Totally neutral. So huge. Look at that spread. Jesus. Look at the size of it. That's massive. What was that spread? 5.5 pip spread, look. Yeah, there's no plus, no minus on that. It's just neutral. So we'll see where we go. DAX, obviously, I am long only at the moment, so ideal will be a TP and a rally up to 5R, in which case that makes a load of money and pays for that, which would be perfect. And then we'll see where we go. How can I use your indicator for prop firm challenge to control the daily loss and max percentage loss? You can't. Yeah, I traded prop last year for a long time. Made a lot of money out of it. But I don't trade prop at the moment. I use my own capital. The question, think about the question you've just asked, Vantage. How can I use your indicator for prop firm challenge to control the daily loss and maximum percentage loss? So you're asking me, can I use an indicator to control the market? No, you can't. You can't use my indicator. You can't use any indicator to control the market. I think you need to go and watch this video on the website. Do you have an EA that you can recommend as a set and forget? No, there is no such thing. Human intervention necessary for all EAs. Yep. Looking for 5 to 10% a month. You found it. Go and watch the position trading bootcamp. So go and get that handbook. Follow that handbook. Morning, Chucks. Thanks for the like, Greg. Morning, Mumo. 53 likes. Keep smashing. I'm going to check up on you again. $54. So hedging can do both. Hedging doesn't use stops. No, that's what I mean. Should I use a stop in the H1M5 RSI strategy? No. Again, go and watch that. Go and download that position trading handbook I've just posted in the chat. Yeah. Position trading does not use a stop loss at all. None of my strategies use a stop loss. None of them. There is no stop losses on any of my charts unless it is a trailing stop to get me out of a trade in profit, like the US dollar yen. Yeah, I have a trailing stop running on that, which I put on it this morning. You never find a stop loss unless it's an aggressive drawdown control position, in which case there is a stop loss because it's an aggressive position. Wrong account. I was going to say, that worried the hell out of me. Where's my stop loss gone on my aggressive? It's this account. Panic. So yeah, I use a stop loss on aggressive drawdown control, but again, that's all covered in the bootcamp, which is all free on the website. Morning, Lucas. Updated daily or immediately when news comes out? What? I don't know what you mean. Oh, do you mean the fundamentals? These are updated as the news comes out within an hour. I have a script that runs every hour and goes and gathers the data, and then it does the calculations, puts it all in here. So it's roughly within an hour, you'll have all that updated. It should say on here. Maybe I didn't put it on this page, but no, I didn't. Try Darwin Zero if you are in the UK. They're not a prop firm, though. They're an investment firm. Your spreads seem really bad. It's only on news. It'll be back to normal. There you go, back to normal now. All brokers spread on news. There's nothing they can do about it. They have to make money, so it doesn't matter, because it only matters if you're scalping on the 1 minute time frame, in which case you're never going to make any money anyway. So it doesn't matter if you've got a good broker or a bad broker. They're having all your money. Any reason you designed your propulsion indicator to have fixed gap width when the gaps are tested or partially filled? Any reason you designed your propulsion indicator to have a fixed gap width? I don't know what you mean. Do you mean the candle strength? I don't know what you mean by that. It just draws propulsion gaps. Don't know what you mean. In the A settings, there is a partial profit and drawdown control when the percentage DD of ADR reaches 1.5. If we set this setting start 1.5, we adjust it to 0.5. Will the frequently close? We will frequently close. Yeah. Advantage. You think you need to go and watch the bootcamp. If you're using any of my products for position trading or any of my strategies, and you have not been through this handbook in detail and spent at least 25 hours watching my content, do not use my products, because if you don't understand what they do, you're just going to lose money. You have to understand what any strategy you trade, any EA you use, if you do not understand the exact mechanics of that, how it's working, why it's working, the logic behind it, the edge, everything about it, you shouldn't be using it. If you're putting anything on a money account and you don't know why it's doing what it's doing, you should not be using it. If you're asking questions about whether or not if I change the drawdown control, we will get out sooner, stop, go back to square one, come back in a week. Don't do it. You're just going to lose money. Just make sure you understand what the product is doing. Darwin Zero offers funding in the same way as a prop firm. No, it doesn't. Try it, Alistair. Totally different concept. Darwin Zero is, they will fund you, yes, but you have to follow, you'll get investment. Go and read up on it. It is different. So you have to, it's the same as I've been trading with Darwin for 15 years. Yeah. With Darwin X, I've been with them for 15 years. I've had Darwins with them. Darwin Zero is a scaled down version of the Darwin X, Darwin AI, Darwinia rather, platform. It is, you have to go through this, look, right? You go through that, then you get up to here, and then you get to here. That's where you start earning money. To get to that, you have to have a strategy that fits about 50 different criteria. Yeah. The seed capital, you won't make any money out of that because you won't get there. I promise you this, you won't get there. Darwin are just the same as the others. You've got to be able to do these returns. With a Darwin, if you're returning more than 5% a month, they kick you out because it's too high risk. Investors do not want to invest $6.5 million in something that returns 10 to 15% a month. That is far too risky. Far too risky. If you put $6.5 million into something and someone goes, I'm going to return you about 15% a month, there is a chance you're going to draw down by 40% on it. Sorry, what did you say? 3 million of my account money might go away? No, thank you. Yeah, it's a totally different thing. People are looking at this as prop. It's not prop. Very different. But I mean, try it. Go and try it if you want to. But you're better off going to prop. I can set up a prop account with EA today, and tomorrow I can have £5,000 withdrawn because I can pass the valuation in one morning, I can pass the valuation stage 2 in the afternoon, be funded by the evening, and tomorrow I can put the SIHEA on with 2% risk and get a 2R target, get $5,000, pull it out. Darwin, 3 months. In 3 months, you might be lucky enough to get to a stage where you're receiving a small percentage payout. You will not hold your account that long. Promise. Use a prop firm. If you want to use, if you haven't got money to trade, first of all, I would say, if you haven't got money to trade with, you can't trade, can you? This is a business. You can't start a business without capital. If you haven't got 100 grand or 50 grand in the bank, you can't be a trader because you've got no capital. If you want to trade in an aggressive way, go to prop. Spend $500 times 5, 2.5 grand. Stick that into 5 different prop accounts. Hopefully you get 1 or 2 of them over the line. And when the 1 or 2 over the line you get, have a lucky streak, withdraw that money. Pay you back your 2.5 grand. Anything on top of that is bunts. That's your profit. That's how prop works. You will never hold a prop account for more than 6 weeks. Funded. Prove me wrong. Someone show me a P&L of their prop firm 6 weeks old. Can't do it. Why? Because you can't do it. Your strategy will not survive that long because it will have a drawdown, and the drawdown will blow the account. And Darwin know this. So what they say is, yeah, no problem, we'll fund you. Your risk's got to be there. It's so much different. It's the proper way to do it, definitely. But I say it in here every week, pretty much. If you do not have capital, you cannot be a trader. Yeah. If you do not have 20/20 vision, you cannot be a pilot. Yeah. If you have not got 100 grand in the bank, you cannot get your pilot's license. Or you can't be a pilot. If you want to open a shop on the high street, you need to fit it out. You need stock. You need staff. You need rent. You need rates. You've got to pay all of this up front. It's going to cost you 50 to 100 grand to open your shop. If you haven't got it, you can't open a shop. If you haven't got capital, you can't be a trader. All these prop firms are preying on the fact that they can give someone 100 grand and you can become a trader. You can't. It doesn't work that way. It's just a myth. You can game the system if you're clever enough and if you've got enough money to do it. But if you've got 2.5 to 5K, which is what you're going to realistically need to make money out of prop, because you're going to need to do 5 or 10 evaluations to get one over the line, why not stick that into your own account and try and compound it for 3 months up to a level where you've suddenly got a balance to trade with properly? That's the way to do it. But I mean, nobody, Darwin X Zero, people have been talking about it for a while. No one's come to me and said and shown me they're making any money out of any of this. Darwin Zero. People are on it. And when I say money, pay the mortgage money, not $500. It's not money, is it? That's just a little bit of cash. Darwin Zero is a subscription service to your trading strategy metrics for potential investment in your trading strategy. Yeah. So basically, you're paying them to monitor your account so that they can see if you've got any chance of making it, and then they will fund you. It's so much tighter, the restriction on it. Yeah, your D score determines your payout. Your D score is your Darwin risk indicator. I know all about it. As I say, 15 years I've traded with Darwin. I've had Darwins. I haven't got them anymore. Why? Because my D score is too bad. Why is my D score too bad? Because I make money. Yeah, I'm not interested in returning 3% a month. That's what they want. They want someone to consistently return 3% a month. And if you can do that over a 6-month period, they will chuck 20 grand into your account. What they do? I can go to the bank and get 20 grand tomorrow. It's just not worth it. But anyway, sorry for the rant, but everything in this industry that promises you something is a ripoff. It is. All of it. Everything is. It's just what this industry does, isn't it? Rips everybody off. Nice whipsaw on the euro. So that news has done nothing. 9 o'clock in 15 minutes, we've got the combined. So probably won't do anything off the back of that. So next news we're waiting for is 9:30 for the pound numbers. So if you've got anything in profit on the pound that is actually worth banking, probably worth taking it. So pound yen, I'm nicely in profit on that. So I'm just going to move my aggressive DD control position down to break even because if this pound suddenly takes off on PMIs, I do not want to be in that on drawdown. So obviously if it takes off to the downside, I'm out. But we will see. Judging by the numbers we've had for PMI for the Eurozone, we could well come out with a mixed, couldn't we? On both of these. Seeing what we did last time. Got up on services, down on manufacturing. It's very hit and miss, these numbers. So these basically, the PMIs are the inflation figures for commercial business. So where you got CPI, it's kind of similar to that. But anyway, we'll see what happens with those this afternoon. We've got obviously the US this afternoon, and then we've got the CAD as well. I'm just quickly looking through to see if there's anything pound-wise worth taking. Pound New Zealand there. In profit now. I'm going to let that one run for a minute. New Zealand CAD is in profit. TP on that. That's starting to rally nicely. US dollar yen is still going. Euro Swiss. I'm going to take Euro Swiss off just because I've got 4 positions on that. I just want to reduce exposure. So out Euro Swiss, 0.8. That's 2.3 on the day. I'm going to bank US dollar yen regardless. Pound New Zealand target is down there. Obviously, we've got the news coming out on the pound. I really want this pound news to be negative today. I've got 5 on this. So what I'm going to do is prior news, 50 minutes. I'm just going to stick a trailing stop on that top position and that position there. So basically what I'm doing is I've got 5 on this, which is obviously quite exposed. So it's that one there. So I can close the whole lot out in profit, but I've done 2.3 on the day so far. So I'm just going to leave that running. I'm going to close those 2 out though. So what's going to happen obviously at 9:30 is either that, or it's just going to flip-flop around. So if it does that, I want that in the bank. And obviously as we push up, I will add that position back on again. Still think we're going to test that propulsion gap and that return to origin move. So if obviously the pound news is incredibly strong, incredibly weak, pound's coming down anyway, and that's all going to hit target. So even if that does take me out and that one's gone, that's my first position, second and third. The average is going to be there. So when we get down into there, I can take all of those off with a break even, and that becomes the profit on the position. So the pound New Zealand, I will be getting out of. That New Zealand dollar CAD has got 5 on as well, hasn't it? So Canadian dollar news is at 2:45 this afternoon. So I'm going to let that one run for the moment. So with this New Zealand dollar CAD, the original position, the lowest position, because I've got 5 on this as well, TP is in that propulsion gap. So again, it'd be nice if we can get a rally on the New Zealand dollar up to there before the news comes out. And I can probably just take that one off completely because I have also got 2 other CAD exposures on. So if I can take that New Zealand dollar CAD off with about 0.5%, in fact, I'm going to do that. I'm just going to stick TPs there. So I'm going to stick a TP for all positions there, which will automatically just get me out the New Zealand dollar CAD. because I've got 2 exposures on the CAD. So regardless of what happens in that news, either those are going to work out or they're not. But if they don't work out and the Canadian dollar rallies like crazy, this is obviously coming down. So if I can take this one off, bank that, the other 2 Canadian dollar exposures will just go into drawdown, which is going to be the Euro CAD, which has only got a single position on, and the US the New Zealand CAD. No, where's the other CAD? CAD Swiss, which has got 3 positions on. So those 2 will go into drawdown. I'm just managing my exposure ahead of the news, basically. Again, pound New Zealand on the H1 hedging. I've got 3 shorts on this at the moment. One of them in fairly decent amount of profit. That's about 0.7%. So 9:30, just before that news comes out, I will take that one off. I'm just going to give this another half an hour. We're basically 1, 2, 3, 4, 5, 6 hours solid New Zealand strength since the news came out last night. So I'm going to give it the benefit of the doubt. If we can get another down candle, a decent down candle by the news and come and retest the previous day's low, I'll take that one off down there. So that will be out. And then I've got that position on and the one below it down there. So that one and that one, the average will be somewhere around about there. So if we get a strong drop on the pound, those 2 will get out at a break even, and that one will be the profit. So the profit on the total position will be about 1%. And I can't do a lot with this because there's nothing really in profit at the moment. Apart from that pound yen, which obviously I will, is covered anyway, but hopefully that'll move. Negative news on the pound we want. Thanks for subscribing, Tom. Welcome aboard. Regarding prop, if you go into the daily loss percentage but don't close it out, will they close your account? Yes. No. So if you got a daily loss limit of 5%. So look, I'm in 5.1% of drawdown. I'm always in 5 to 15% of drawdown. That's where I live because I have to have risk on. My account balance is there to be risked. That's its job. My money is risk. It's my business risk. I.e., like I was talking earlier about starting a shop. If you get a shop, you got to pay your rent up front, your rates, you got to buy the stock, you got to fit the shop out, and you got to hire a member of staff. That's 70 grand gone, right? That's my 70 grand. Yeah. I'm using 5% of the 100 grand I had to start my shop. I'm using 5% of it to see if I can make some money. That's how trading works. Prop knows this. Yeah. So if you've got a 5% drawdown, I'm out. They've shut my position, so I've gone. That's it. Count blown. Yeah. That's it. So, but they know this. They know this. Yeah. All these people that run these prop firms, they're all run by people that have been trading for years. They know how trading works. They know for a fact there is not a strategy on this planet that will not take a 10% loss on an account at some point. Yeah. This is why you have a 10% overall drawdown. Yeah. They know that the vast majority of strategies tell you to risk 1% of your account. If you have 5 trades a day that lose in a row, and you will regularly, the account's gone. They know that the psychology of a trader means that when I get a losing trade, followed by a losing trade, followed by a losing trade, I'm 3% down. Today, I'm going to stop trading. What am I doing tomorrow? Immediately, I've got to make back 3% of my account because I lost that yesterday. So what do I do the next day? I'll tell you what I'll do. I'll do 1.5% today because I've got to get that 3% back. 1.5R. 1.5R. I am now down minus 6R or 6%. I've only got 4% left in 2 days because I've had 6 losing trades on a row. Go and look at your statistics. You will have 6, 10, 15 losing trades sometimes because the market conditions won't be right for your strategy. They know that. So what does it do? You blow your account. They know this. If you're lucky enough to get your strategy work well for you and you can hit target in a proper valuation over a period of a week or 2, well done, you've passed phase 1. Do it again because that was luck. All right, I'll do it again. Well done. Here's your funded account. Do it again because that was really lucky. Pop, back to square one. What have you lost? 3, 4, 5, 6 weeks of your life and $500. Rinse, repeat, rinse, repeat, rinse, repeat. Why is it you're now 4 or 5 months into trying to get money out of prop and all you've done is lost $1,500 to $2,000? Because they know that strategies don't work like that. What does work is entering the market and waiting for the market to move your positions into profit. You can't do it on prop. They know this. They're not stupid. It's a business, right? They're basically selling you a demo account for $500 or $300 or $200, whatever the money is. They're selling you a demo account. They're saying, here's 100 grand. What you've actually got is 5K. Yeah, you got 5% drawdown. You got 5K, 10K over a period of multiple days. But every day you got 5K. Over a period of time, you've got 10K. Yeah, there's no such thing as 100K. You've got drawdown. Wherever your drawdown is. My drawdown on this particular account is 50K. I've got 50K to trade with. And I'm using 0.0x lots, right? I'm using 0.3s. 0.1% risk of my account over half an ADR's movement. Why? Because I know damn well this market will go where it wants to. Prop know that as well. That's why they don't allow you to trade like this, because this is how you make money. You haven't got the capital, you can't do it. You can do it. I've proven it. I was in here last year with prop accounts making money, but not consistently. I was losing accounts left, right, and center. This is why I was taking 5, 10, 15 accounts a month, because if you can spend 10 grand a month on prop evaluations, by sheer luck, some of them will get funded. Those ones you just need to milk, ramp it up, go in hard. Put the SIH EA on there, right? Set your risk to 2%, right? Go out for 2 hours and come back. What will have happened? You'll be in 2% of drawdown, or you'll be up by 4 to 10% on your account. Thank you. Withdraw. That's what you do. You get the money out of the account. You get one trade, you make a shed ton of cash, and you take it because you've got to pay for all the failed evaluations. Right. Excellent. Day 2. Same thing. Let's go with 1% this time. Go out, walk the dog, do something, come back. An hour later, what happened? We hit target. Excellent. That's $2,000. Draw it out. Stop. Because this will at some point fail. You will have a losing streak. Your P&L will have one of those. When it does, you're dead. But if you got your own money, you're not dead. You just get on to tomorrow, because tomorrow we'll get that money back, or the next day, or the next day at some point. But you're not going to be able to do it within the rules that they set you, because the rules are set to make sure that strategies fail. It's just the way it is. But you can game the system. But you can't game it with one account. Don't ever believe that you're ever going to double that account when you hit their profit targets of 10%. Hey, get your funded account. When you get to 10%, we'll double it. And if you get to 10% again, we'll double it again. You're never going to get there, but we will, honestly. They even publish statistics. 0.04% of people hold an account for 2 months. 0.04%. And that's not 0.04% of people. That's 0.04% 4% of people that get funded. The people that get funded are less than 5% of the people that start an evaluation. It's literally 2 out of 1,000 people will ever get to month 2 of a funded account. I got there once. Don't be fooled, people. When you get a 300k account and turn the risk down to almost nothing, and just fund your personal account with that, there's no way you'll hit the 5% drawdown using 2%, 0.02% risk. Yeah, but you'll also, Tom, never hit the target. You'll never hit the target. If you get, I see what you mean. If you gamble your way to funded and then drop the risk right down to virtually nothing, yes, obviously, but then you will make virtually nothing. So, I mean, if you can return like 2% a month on a 300k account, that's decent money. But you will be in drawdown to return 2%. I mean, look at my month, on this account. This is a 50k account, and I've banked 2.83% this month. It's been a bloody tough month, awful month, because the market's been doing that. It's just been like pulling teeth all month. Yeah, my drawdown's gone up to 10%. I'm sitting currently in 5% with 2.83% banked. Yeah, to make 2.83%, which on a 300k account is not to be sniffed at, I still haven't done it within the parameters. I'm sitting on an account blow. So yeah, I could have reduced my risk down even further, which would have made that even smaller. But you cannot control this. This is controlled by the banks and institutions. Your drawdown is controlled by bank movement. If we knew when the drawdown was coming, we wouldn't get into the drawdown. Again, it's the whole crystal ball thing. You can't do it. You can't predict the future. When you stop trying to predict the future, you just start making money. And that's what you need with prop. But yeah, I mean, I do understand that. If you can get your account, but this is why some of these props have got a minimum withdrawal amount and things. Most of them don't now, which is good. But, the trouble with this whole psychology point with prop is, as Tom said, if you can get a 300k account and get yourself onto that with very, very, very small risk, like 0.1% per entry type thing. The problem is, to get that account, you have just proved to yourself that you can produce, what's the target on that? 30k, $60,000 within a matter of weeks. What's your brain going? I just made 60 grand in 3 weeks, passing stage 1 and 2 evaluations. And now I'm going to try and get 1,500 to 3 grand a month. No. The brain tells you can do it. You've just proved to yourself you can do it. You've got a strategy that can do this. You think you could possibly drop it down to the point where you're going to make virtually no money? Psychology is not going to let you do that. If you can, it's brilliant, but not easy. When will your new EA be done? I don't know. I have no idea. I don't build EAs with a list of. I do build EAs with a list of what I want it to do, but I adapt along the way. So I spent all day yesterday getting the automatic magic number working, and then decided scrap that. I'm going to use a different way. So I can never put a time period on things because it's an evolutionary thing. There's certain stuff I want it to do and I need it to do that I'm kind of, I would say, 75% there on. It's testing now. Look, it's live testing now. It's done $1,600 so far. So yeah, it's all working, which is good. But there's certain stuff that it's not doing. yet because I haven't coded it. So I don't know. I couldn't tell you, but it's always like everything, isn't it? When it's ready, it'll be ready when it's ready, when it's cooked. Will you be trading like on one account? I don't know. It's all. Yeah. I mean, basically, I'm going to keep the market reverse alerts EA and strategy going. I will probably use this more for support resistance plays. And other strategies, basically. Like I said, there's no, a strategy, a position trading strategy is a position trading strategy. How you get in is irrelevant. I've just got into this by pressing that button. Why have I got into it? I have no idea. I just got into it. Whether it works or not, the EA will close out the profit when it gets to the target, or it will go into drawdown and it will take a next long position there. Yeah, you see what I mean? It just doesn't matter, does it? So I keep saying, look at that. I pressed the buy button and now it's gone up and I've got $25. I can close it out if I want to. Right now, make $25. Yeah. Sell it now. But that, I don't know why. I'm wanting to do more deviation, more diversification. So the way I used to trade, talking about prop, the way I used to trade prop is literally support, resistance, bounce plays. So that's all I did on prop. I passed it with the MRA EA as well on H1M5. I passed one evaluation with that. It took weeks to do it, but it did it. And it was touch and go, but it did it. But most of my plays were support resistance bounces on the hourly time frames. So that's probably that's what I want to use this for. It's like we go through the live room. I said yesterday, we go through the live room and I'm looking at this pound yen now and I'm looking at this and going, Jesus, look at it. It just bounces out of that every time. Let's go long and let's see if we can get up to there. I want to be able to take that type of trade, but with the market reverse alerts EA, I can't. I can press the button and then I can put the EA on to manage it for me. But I also want to be able to just do that with just myself. So it's discretionary, but it will also trade everything. It will trade ADR reversals. It will trade H1M5 mean reversion. Well, it will trade mean reversion using RSI, and it will trade ADR reversals automatically if you want it to, or all of them. So you could literally put it on one account, right? And if you get an ADR hit, it will take it for you. If you get an RSI hit, it will take it for you. So it's one EA that trades all strategies. But I'm setting up to trade the strategies that I would want it to trade. So it's going to do what I want it to do. It will hedge as well. Because if the criteria are met, it will take the trade. Same as the market reverse alerts EA does. If you get an H1 RSI extension, M5 mean reversion, and you go short, and it does that and doesn't quite get to your target, and then you get an H1 RSI long, it will go long. It will do both, won't it? Because you're not going anywhere. So yes, you had a setup there. That trade didn't work out. Now you got a setup there, and that trade's started to play. So this will do the same thing as that. So it's all the same stuff, isn't it? At the end of the day. You might have covered it already, but would you recommend switching the EA to only trade on short signals for yen pairs? Up to you. With the yen, I mean, at the moment, April's a long way away. It's difficult to tell if we're going to come back up on this or not. I think the thing that will determine whether or not the yen powers up will be the US dollar and what happens with the US dollar. The US dollar is so hit and miss at the moment with directional bias. It's very difficult to tell. So yes, you could, but look at me. I'm short from here. Yeah, it's not the right decision, is it? the right decision was to go long. So, you can never tell. But when they do that interest rate increase, it should power up quite dramatically. So, yeah, where we are now is ripe, isn't it? If you look at the 4-hour chart, we are ripe for shorts. If we're getting that power up. But what we could see is that until April, I don't know whether it's the right time or not. I really don't. I think long term, definitely, but short term, over weeks, it can do both at the moment. I haven't got a directional bias on. I just happen to only have shorts on the yen, or rather longs on the yen. So I'm short against the yen. Just because there has not been any RSI extensions to the downside to go long. But when it does, the EA will be getting me in long. But probably towards the end of February, I'd be thinking very hard about wanting to take a long position. Because don't forget, the market will factor in price movement. So when we are expecting an interest rate rise, you will always see, usually about a week before, maybe 2 weeks before that news, the market will suddenly start to move in one direction because they are scaling into the expected move, the forecast. So this is why when we get news as forecast, like with the New Zealand dollar, yeah, we're getting this reaction off the New Zealand dollar. Yeah. The reason we're getting that is because they've told us what we were expecting. Yeah, we were expecting to get a 0.5. We got a 0.5. If that came out as a 1, yeah, you'd have a massive move of 150, 200 ADR on the New Zealand dollar because it's not expected. But what you tend to find is before the news comes out, the market will have moved already to where it thinks it should be based on the expected, in this case, 0.5% change in inflation. When the market's moved there, if it didn't get what it wanted, we go mental in one direction or the other, don't we? We just go crazy and we move all over wherever we're going to go. And that's the market going, crap, we got that wrong, boys. We should have been up here. So scale out or scale in. Yeah, so we got the move wrong. The move happens before the news. So when they say they're going to change the interest rates in April for the yen, what will happen is during March, the market will get into the yen ready to make that money when it happens and add into that position and drive that rally. So you'll find that the yen will start to power up before it happens. So you probably towards the end of February, you don't really want to be taking any longs against the yen because it's going to be, everything will be starting to drop against it. But everything is speculative. We are expecting interest rates to change on lots of stuff, but it's all driven by CPI. If that CPI number suddenly starts to tick up and doesn't tick down again, they're not going to do anything with the interest rates. There's still a danger of these going up. Yeah, some of these countries, yeah, I mean, like Euro, we've ticked up by 0.5. We've ticked up by 0.3 in the US. We've ticked up by 0.1 in the UK. Yeah, what we're expecting is the tick up and the drop, the tick up, the drop. That's how inflation comes down. If we get a tick up, no change, and a tick up, they're not going to drop the interest rate. Yeah, and that's exactly the same for the yen. They're targeting 2%. We've come down by 0.2. They're expecting to be at a decent level close to 2, i.e. 2.2 by April. If that reads 2.8 in the end of March, that's not changing. So all you can do is, and this is why COT is so useful in normal market conditions. At the moment, we're not in normal market conditions by any shape or form, but this is your quarterly top-down overview on the market. At the moment, the futures market with the banks and institutions are positioned short on the Australian dollar. They are expecting, you see most of it is short. The euro and the pound is still long at the moment. Yeah. And we are undecided and neutral on the US. But this is at the moment, if everything carries on as it is, sometime in the next quarter, we would expect this type of movement. But things change on a month by month by month by month basis. And this is why these numbers run up and down. But there will always be an overall bias. And typically, you will always find the overall bias on the US is long because it's the world's currency and 90% of transactions happen in it. You'll always find the bias is short for the yen because the yen has a negative interest rate and there's no point in putting money into it because you lose it. Yeah. So there's things that are always fundamentally there, but they change. When that interest rate changes, this will creep up more, but it's still going to be 0, and I can get 4.5 in other countries. So this is never going to be fully green up there unless they whack their interest rates up through the roof, because that's where you want to stick your money in, the yen. At the moment, if you put $100 into the yen right now, yeah, next month you'll have less than $100 in there. Why would you possibly do it? You don't. Yeah. So, but these things will change. So this is why fundamentals are important, and this is why the directional bias scorecard is there to show you roughly where we should expect markets to go. At the moment, based on the fundamentals, it's that. But this does not take into account what we are expecting. It takes into account where we are. We are expecting the yen to change. So yes, you should be buying it at the moment, but the closer we get to that 0.1 in that 0 coming, which we expect it could be a 0.1 in April, that bias is going to be wrong. It can only show you what is happening now. Again, it's an indicator. Like everything else, it lags. It shows you what's happening or happened with interest rates, what's happened with inflation and unemployment and GDP, what the COP positioning has been, what the retail sentiment is right now. Doesn't tell you what's happening in the future. It's an indication of where we are as an overall picture, if you like. So your guess is as good as mine. Yeah, World War III could kick off next month. At the moment, with what's going on in the Middle East, it's just there's fighter jets flying everywhere. There's bombs hitting commercial vessels. There's bombs hitting everything. Yeah, we've got a country annihilating the population of another country who we're allied with. Yeah, we protected them in World War II. Now we decided to let someone else kill them. It's just, it's all mental. It's just not. Anything can kick off and anything can change at any moment, which is why you need to be basically flexible and on top of stuff and let the market do what it does. It will never go in a straight line. It does not go down for 6 months. It comes down and goes up and comes down and goes up on its way. As long as it does that, this is going to work. So even if you get the bias wrong for 3 months, as I did with the pound US dollar last year, didn't I? I got it really, 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 really wrong on the pound US dollar here. I was long. Really wrong. I got out. It took 3 months and it was painful and I lost a bit of money. Yeah, so that is what I would expect to happen to all yen pairs. But I don't know. Nobody knows. You can't know. If you knew that, you'd do it. That's what speculators are, isn't it? That's what your Warren Buffetts of the world are. Yeah. If you've got 25 billion in your account and you press the button wrong, you just keep pressing the button until you're right. It's never going to go 25 billion against you. You're always going to come out with a profit. And if you target 10% a year, happy days. What's 10% of 25 billion? I don't know. Certainly more than I need. This is what position trading is, isn't it? We don't have to get it right. We have to be able to withstand the wrong. That's all we've got to do. What's the difference between non-HFT challenge and HFT challenge? I don't know, but HFT stands for high frequency trading. So that will be, they will probably allow HFT bots. These are your 1 minute scalpers, in, out, in, out, in, out, in, out, in, out. They don't work in CFDs because of spread. HFTs only work in the futures market where you've got a spread of 1 pip or 1 price point. You won't find an HFT that works in First of all, you can't get executed fast enough. Second, you're behind the banks in the queue. So it doesn't matter if you've got 100 million you're going long. If the banks have got 10 million going long, they jump you. You can't get ahead of them. How can you high frequency trade against something that's always one step ahead? And you've got spread. Yeah. So the spread will always make you be one step behind, multiple steps usually behind on the position. And HFTs are in and out within seconds and minutes most of the time. What an HFT actually is and what an HFT EA you might find on a marketplace or somebody selling is a totally different thing. But a lot of the prop firms do not want you trading HFT strategies because they can take advantage of arbitrage. Don't forget you are trading a demo account with lag. So I think that's probably why they don't like it. But if there's some out there offering it, great. But if you don't know how to HFT trade or you haven't got a strategy that does it, it doesn't make any difference, does it, at the end of the day? But it will just be a slightly different set of rules. Out US dollar yen. Still coming down though, but taken out on the trailer. New Zealand dollar. That's close enough for me. I'm going to take New Zealand CAD off as well. So close to TP. Out New Zealand CAD, 0.75%, 3.3 on the day. Payday today. Pound New Zealand's the other one which I need to monitor. So this Pound New Zealand, obviously, need to worry about this because of news. So those two I'm getting out of regardless. So either the trailers are going to get me out, which it looks like they probably will do on the way, or the pound news is going to come out in 5 minutes and will be at target. More likely what will happen is it will do that, because that's what happens, isn't it? Use a trading stop, you get stopped out. When a broker is regulated in the Seychelles, if some black swan event causes them to go under, would my funds be protected? No. No. They will be protected under the Seychelles regulation, yes. But if a black swan event happens, you will get a margin call and you will have all your positions closed out. So you will get margin called. It's all automatic. All brokers operate with automatic margin calls. Yeah, it's not something that is manually done. It's automatic. So your margin in your account, that for me it's showing 4,617. When that number reaches 100, my trades will close. Yeah. So dependent on the speed of the black swan event, bearing in mind I've been trading for more than 15 years and I've only ever experienced one ever, which was the Swiss franc peg removal. I've never had another black swan event in 15 years. So chances of it happening to you probably once or twice in your lifetime. If it was to happen, you just lose your account. And quite possibly your broker goes bust anyway. So it doesn't matter. If you don't lose your account and you make an absolute fortune on the move, i.e. you're the right way on the black swan and you haven't got a TP in place that would get triggered automatically, which means that you don't make any money anyway because you just make whatever your target was. If that was to happen and your broker was to go bust, then you have no way of getting that money. But all brokerages, regardless of where they are in the world, have to have segregated funds. So your account is safe, but the profit you'd have made wouldn't be safe. You wouldn't be able to get that back because you've got no regulator to go through. You've got the regulator in the Seychelles, but the regulator in the Seychelles will probably turn around and go, yeah, you're in the UK. Whereas in the UK, they can't do anything about it. It's law. The UK citizens. Seychelles law does not cover UK citizens. If you're in the UK, obviously. Yeah, that's all that would happen. If you've been through I mean, we've only had one. We've only had the Swiss franc cap removal in 2015. So if you were trading through that in 2015, you know what I'm talking about. Most of the brokers went bust. Yeah, there wasn't enough liquidity. Their accounts literally within minutes just went. It was all gone. They couldn't fill. Like, even if I said, "I'll give you 100,000 times your normal commission, just fill my order for me," you couldn't. Because there was no liquidity. That's what a black swan is. Something like the COVID crash is a market crash. That happened over days. Yeah, you had plenty of warning on that. Well, I put a post in Telegram the other day about that one, about the COVID crash, because someone asked me if I made or lost money in COVID. I lost money. But I identified it was happening, and I hedged the account, but I hedged it in a loss. So this was the COVID crash on the pound US dollar. Each of these orange blocks is 1 ADR. Yeah. That was 15 ADR drop in, and this is obviously a week. Yeah. So from that point there, so this here is normal price action candlesticks. Yeah. What we had was suddenly like, holy crap, we've done an ADR. Holy crap, we've done another ADR. Holy crap, we've done like 6 ADR in like, this is a 4-hour chart. Yeah, we've done 6 ADR in a day. What the hell's going on? Italy's locking down. You had plenty of warning. That's not a black swan event. That's a market collapse, a market crash. And then it was 15 ADR down. If you hadn't identified there was something wrong there, tough. Shouldn't be trading, should you? Literally, that's abnormal. If I was sitting in here in the live room and suddenly I went, hey, we got 200 ADR, we got 300, we got 500, we got 600 ADR move on the US dollar. There's nothing in the news. What the hell's going on? What do you think I'd do with my US dollar positions? I'd either shut them or hedge them or do something to stop whatever was going on, because something's wrong. This is why ADR is there. We get 225 ADR moves 1% of the year. Yeah, if it goes much beyond that, something is very, very wrong with that instrument, that currency. Something's dramatically changed, hasn't it? You had an opportunity to exit this. This wasn't a black swan. A black swan event is that, which is a totally different thing. And they just don't happen. You know, they just do not happen very often. Christ almighty, we've got to go back, haven't we? Yeah, that's a black swan. ADR on this is 58. That candlestick is 18,000. You're dead. Everyone's dead. The brokers are dead. Everybody's dead. There isn't anybody alive. If you shorted it, there's nobody to take the other end of your order, so you can't get out. Yeah, you're dead. By the time you've got down to there and gone, holy crap, my account balance was 5,000. Now it's 650,000. Oh, why is my broker not answering? He's bankrupt. This has happened once. You get big days. Yeah, I mean, you get big days. But this is the aftermath of the black swan, where the market was like, right, okay, now we can trade the Swiss franc freely. How the hell do we do this? You get increased volatility, increased ADR, increased ATR. So now this is just a 150 ADR day. Back here, that was a 800 to 1,000 ADR day, because that's what the candlesticks used to be. After that happened, the candlesticks are now that big. ADR changes. So what do? Adapt with ADR. This is why we use ADR, because the pip count there and the pip count there are billions of miles apart. Why we use ADR, because stuff changes. Look at where we are now. Look, back at the low of the black swan right now. 9 years later. Different. News is out for the pound. Massively bullish. Not good for me. So I'm out of my pound New Zealand. Why have you not closed that one? Did I use the wrong TP? Or did I decide not to? Oh, that's hedging. That's why. Sorry, wrong account. So banked more there on the pound. So these are all going to draw down now. So got a load of ADRs hit now. Look, so Euro US dollar. Big rally on that. So the US dollar's dropping off the back of the pound news by the looks of things as well. Pound CAD ADR, pound US ADR. So opportunities for pullbacks on these. Let's have a quick look at the numbers. All green. So manufacturing up less than 1%. Less than 1%. So it's not big news. It's less than 1% deviation on the forecasts. And the forecast was to drop. So it's actually back to pretty much where we were. And that forecast was increase, and we got slightly better than forecast. So it is pretty good news for the pound. But expects, not going to go far for long. Maybe you can tell your broker to close you out at 20% drawdown. Yeah, I wish. You can. You can. That's leverage, isn't it? Yeah. So I have a 1 to 500 leverage, which means I can have 100% of my account used. If you've got a 1 to 30 leverage, yeah. If you've got a 10 grand account in there, as soon as your drawdown gets down to about 3-4 grand, they'll shut all your positions for you. So you can change your leverage. Go with a 1 to 10 leverage. Yeah. You won't be able to get any size on, but you also won't be able to have that risk. That's what leverage is. This is why leveraged products are risky. You can also not have your money in your account. Yeah. And again, that's what I did after. So I don't as much now, to be honest. But I always kept them. When I was trading with Axie, I never used more than 30% of my account in the broker. And then if I got into drawdown and required extra, I would top it up, which happened every now and again. So yeah, that way you trade with the risk of your hold account. So let's say you had $100,000 or £100,000. You trade with a lot size equivalent to that, but you put 30K into your broker. So it will appear that you are 3 times the risk on your account that you should be, but that's because you've only got a third of your account in there. That way, if there's something catastrophic, you lose a third of your account, not 100%. So you can fight another day. So yeah, that is an option. Move down on the euro pound. So that's going to hurt my pound yen. Not much though. Look, see, this is how strong this pound move actually is. Look, not that strong. We're only going to get ADR hits against stuff that is really, really weak at the moment. US dollar being one of those at the moment, which is obviously coming down very hard. So obviously when the pound rallies against the US dollar, whilst the US dollar is dropping, the pound's rallying, you get twice as much movement. So some of this stuff obviously is moving. Euro US dollar, I can actually bank something, look, nearly. Coming up into propulsion highs. That's not really a propulsion gap, though. That's an A-shaped recovery, so that's not really a valid. It is a massive sell order, obviously, but it's not an accumulation break, so it's not the start of a move, which would tend to be a lower high. So there is a chance that we will take these highs out. We've got the figures out, obviously, for euro already. They're all mixed for the euro. Here you go. So this is what I was talking about earlier. These figures make up 80% of the eurozone economy. I'm not quite sure the exact percentage, but it's very high. So what you get here, green, green, red, red. When you get these euro flash, they tend to be the same because obviously these figures are made up of pretty much 70-80% of those, which is why these are orange, because we know what the outcome of those is going to be because we've had those already. Right, DAX, I'm still long. We haven't gone anywhere. Looks like we're starting a push. So hopefully the DAX will actually get going and I can get TP hit on that. We got a very strong resistance potentially coming up for a weekly level there. So we're likely to get a pullback off of it, but we might get through. We'll see. It's neutral news on the euro, so there's no obviously advantage or disadvantage on the DAX. FTSE's rallying. FTSE's dropping obviously because the pound is rallying, so the indices do the opposite to the base currency. So that will come down as long as that pound rallies. If that pound is a spike, and we're just going to do that and fade it for the day, that's going to do that. So if we get a continuation rally on the pound, I will get out at ADR, which is basically yesterday's low. You've got previous day's low and the previous day's low, all within 125 ADR. So there's 25 ADR basically of movement between all three of those lows. All three of those will have limit orders potentially at them. So if we can get down to there, and I take profit there, and it pushes through that level, we've got three major bull areas which are going to pop it. So I suspect if I can get that today, that will be probably a very easy out. DAX, not really doing anything, is it? So at the minute, can't do a lot with that. Pound CAD, ADR 125. So there you go. This is a prime example. Look. Oh, look at all this profit I've just banked. 2,171. Very nice. So look, pound CAD. Idea being, basically, like the look of this. So I can either go, I mean, I'm not going to go with a pending order. So if I can switch down to M5, look. So let's go the sell stop there. That triggers, I'm in. If it works, brilliant. If it doesn't work, now the EA gets me in. This is a nice highlight. Look at this, isn't it lovely? I can change time frames. Yeah, I can even switch to a different currency, and it resets everything. And then I come back to my pound CAD, and it goes, "Oh yeah, you're trading the pound CAD, aren't you? Just to let you know, you've got a pending order on there, and all of this data will automatically update itself." Fantastic. You are no longer limited with an EA to just down one chart. You can flick between them. If I go to the pound New Zealand, because pound yen. What have I got trades on? Pound Swiss. No. Euro pound. I got trades on Summit, surely. Oh, no, I haven't. What have I got trades on? Aussie dollar, US dollar. So I go to the Aussie dollar, US dollar, and everything automatically updates. Shows me my next short position and everything. Brilliant, isn't it? It's going to revolutionize my life, this thing. But anyway. That's not bad, is it, for testing on the 1 minute chart? Pretty happy with that. So yeah, we'll see what happens with that pound. That's the demo account, by the way. So I'm not taking a short there. I'm not trading against the news. Wait, so you'll determine the entry yourself and the EA will scale in? Yeah. Or the EA will do it for you. So so on here right now, so this is set up at the moment to use the 1 minute time frame and 15-minute RSI. So you can see the 15-minute RSI on the 15-minute chart is at 70. Yeah. So basically, if I cancel that pending order off, this is now trading M15 M1 automatically. So it'll automatically get me on an M15 M1. So M15 RSI extension M1 signal. But if I go, actually, I fancy it now, it will automatically scale in for me. If I hadn't have pressed that button, it would have automatically got in on the strategy I said I want to trade, or the strategies, multiple. But the beauty of it is I can now go, let's have a look at this. Let's have a look at this, right? And it automatically will update all of this. Yeah, look, it knows where the last prices were. It knows what size to take next because I've got a lot multiplier. So it knows I need to get in with 1.3 short because I've got one short already. It knows everything. Clever. It's way, way, way cleverer than the market reverse alerts EA. But obviously, if I do that, it's now not managing pound CAD. So you need it also running on a VPS so that it will now scale in on pound CAD because you've obviously got to have chart. Or the other alternative is you open 28 charts. You can use it that way. But you only want it running, basically. Because it doesn't work if it's not running. The chart's not open, the EA is not running on the chart, it's not going to do it. Takes manual entries into account in terms of scaling, yes. Because you're taking a trade with this button, these buttons, as long as you use these buttons, these are the EA. So that trade I just took there on pound CAD, look, the magic number is 999. You probably can't see it, but why's my magic numbers not showing up? There you go. So expert ID 999. So the first trade that you take manually is also included within everything. It's kind of a hybrid between the market reverse alert CA and just you taking trades discretionary. But it will manage everything. You know, so the next short position there, you can see is really close because I've got it set to 0.1. So if I set that to 0.5 between trades and then switch out to the pound odd and then come back to the pound CAD, yeah, it's now automatically changed the next short position to be all the way up there because I've changed the setting from 0.1 to 0.5. But when you make changes in settings, it doesn't do it immediately because with the way the EAs work within MT4, when you make a change on the settings, it doesn't do anything. It doesn't recommit the EA. So to do it, and the same as if you change timeframes, it won't recommit the EA. But if you change currency and then come back, it will then reinitialize the EA, get all the information again, do all the calculations again, and then redo that. Yeah, good. It's just an evolution, basically, of what I do. No one can complain about the reason for their entry. They can use any reason and let the EA scale in. Yeah, exactly. This is what I keep saying. And this is what I want to do. The whole purpose of me building this is to simplify the whole thing down. It's too complicated. Everything I teach is complicated. It's trading. It's not an easy job. And the EA is, if you're new to trading and you see my market reversal alerts EA, you are just overwhelmed. This guy has said that he just waits for RSI extensions and gets in and waits for the price to move. What the hell is this lot? So I want to be able to put the position trading EA out there and say, do you want to trade H1? Do you want to trade multi-time frame mean reversion? Yes. Okay. What higher time frame do you want to use? What lower time frame do you want to use? That's it. So that is now mean reversion trading for you. Do you want to trade ADR reversals? Yes. What percentage of ADR do you want? 125. That's now trading ADR reversals for you. That's it. Mean reversion, ADR. Do you want to take manual trades? Yeah, press a button. That is it. That's what I do, isn't it, in here? I'm not doing anything complicated. That's what I do. But the products are too complicated. The strategy is complicated because you know, aggressive drawdown control. It's going to do it automatically. The problem is I don't know what your comfort level is. That's the thing that I cannot answer for you. But what's your comfort level? 5%. Okay, enter 5% in there. And if that is 5%, it will do aggressive drawdown control the next entry for you automatically. If your comfort level is 7 positions, enter 7 in there and it will automatically do aggressive drawdown control for you. Yeah, and it will use a stop loss. Yeah, it will do it all. But there is still going to have to be something, because I'm happy in 4.7%. I'm not happy, obviously. I'm in, and it's not the best thing in the world, but at the end of the day, I've got a plan to get out of it. But some people will be sitting there and looking at that and going, holy crap, this guy's a lunatic. But I've been doing this for many, 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 many years, and I know that that can go up to 6 or 7% before it comes back down again. I know that this move could well be back down here this afternoon because this isn't real, like it wasn't the other day. Yeah, on most of these pound pairs, we've been reverted them all. You know, so I can't answer every question, but I can make it as easy as possible. And you know, there's always going to be discretion. Somebody asked earlier, can you have an EA running full auto? Yes, you can. Will it work? Don't know. You have to have some intervention with everything you do in trading. It's a job, like every other job. You can't have a job where you don't do anything. It's not a job, is it? It's a job. You've got to learn stuff. You've got to be able to do stuff. You've got to be able to look at a chart and go, that's not right. That's probably more realistic. Yeah. So, you know, I moved this here because it's more likely that that will happen than it get to there. So if my target's there, it doesn't make sense. That's more sensical because that happens. Doing that took me 2 seconds, but that is my job. Only took 2 seconds, and now I'm not going to do anything all day. I'm going to go off and do other stuff, and this is going to do what it does. But today, my job was to say, I am hedged. Where shall I get out? Yesterday, the job was, wow, we got out within 4 hours, and I didn't have to do anything. Yesterday, my job was to sit here and go, clean break, target 1, target 2. My job was to watch money come into my account. But not all days are like that. And with position trading, you have to be watching this. The reason I'm not worried about this, and again, this is going to be different. I wouldn't use an automatic drawdown control setting personally myself, but the reason I'm not worried about that is because 50% of that is that 4.5%, right? So that's 4.5%. That's 8.4%. So I'm actually only in 4% of drawdown on all of my positions apart from that. So all of these have got the ability to bank me that when they start to play out, haven't they? In which case, then I'm just going to walk away with a 2.83% month on a flat account. I don't know what's going to happen yet, but that if I had 15% drawdown there, and there were 5 positions all in 3% of drawdown, I would probably want to enact aggressive drawdown control on all of those because there's too many problems. At the moment, there's one problem, and I'm dealing with it. And I've got a plan, and I'm already in that plan, and that plan is going to fail if we hit that monthly high today. And then I will rethink that plan. But that's my job, is to plan what do I do if this rallies out the highs. I might have to close some of this out and walk away with a flat month. But then I'll be looking at my other accounts going, well, that's all right. I've made 8% there and 5% there. So if I walk away with a flat month there, doesn't matter, does it? I've made 15% on these two. But those decisions, there's nothing I can teach an EA to make those decisions because it's me. It's you. It's your job. But it will do as much as it can, as simply as it can. But at the end of the day, you're going to still have to interact with this, with everything. Just want to make it idiot-proof, as idiot-proof as you can. But if you're an idiot, you can't trade, basically. Sorry. I can't make you clever. Some people, when you've been doing this for a while, some people you just look at and think, it's not going to happen, mate. Identifying that is the best way to save yourself money. Trading for dummies 101, yeah. But that's what all these EAs on the marketplace are, aren't they? They are dummies. They're stick this on your chart. This is what it's done in the past. Do you want to go high, medium, or low risk? Start. What's it doing? How? Why? You know, it just, that's what trading for dummies is at the moment is, hi, my name's so-and-so and so-and-so. Come and look at my mechanical trading system. I've built an EA and it executes the mechanical trading system for you. All you do is you place it on a chart and do this. Over the past 6 years, I've curve fit my results to produce 170% a year. Only $50? Lost $1,000. Cost you $1,050, that thing. That's normal trading for dummies. Yeah. My trading for dummies is 25 hours worth of videos before you should even look at a chart. Yeah. And if you're still a dummy at the end of it, go and work at McDonald's. Harsh, but fair. Yeah. I can't be a fighter pilot. I'm not going to try. Why do you think you can pick up a £100,000 account and suddenly make 10, 15% a month? You can't. It takes a long time to figure this out. I'm trying to fast track it as much as I can, but at the end of the day, you've got to put the time in. And if you ain't got the time, again, you can't do it. It's the same thing. Time is the most expensive commodity in the world. You've only got a limited amount of it. Yeah, if you work full time, if you work 48 hours a week in the NHS or something like that, yeah, and you come back and you're absolutely knackered, there's no way you're putting 1 or 2 hours an evening into learning to trade, which is what you're going to have to do for 6 to 12 months before you even get an understanding of what a candlestick is and how it works. Yeah, it's just, it takes time. People don't understand it. They think they can chuck something on a chart and it makes money. It doesn't work, does it? We know that because we've done it. We've all been there. We've all failed. People do it with my products. Oh, I'm using this stock index hedge EA. I can't find a profitable backtest because there isn't one. We've got World War I and World War II in the past. When's World War III coming? I don't know, but I can tell you when World War I and World War II were, and I can tell you how to make that be profitable, but it's not going to help you forwards. You just need to do it. Not any magic or holy grail. It's just time and effort, same as everything. Is my chart frozen, or is that pound yen totally stalled out there? I know, it is moving. That's right. It just had totally stalled out. The whole market stalled out. Looked like I had to check the stream then. I looked like I'm frozen. Coming up to pound US resistance as well. So there's some good levels coming up for potential shorts. I might do some DD control over here as well today. I'll see how this goes. Right, I'm coming back this afternoon, and obviously we'll trade the US session. So for this morning, for the indices, the DAX is long and it's stuck. We're 1.5 hours into the session. We've gone more than 1.5 hours into the session. We haven't gone anywhere. So that was your open. This is where we are. FTSE has broken short, but not. I mean, this pound move has completely stopped, hasn't it? So at the moment, so what happens with this, I don't know. So at the moment, hopefully we get a long break. If we get a hedge, we get a hedge. There's nothing I can do about it. So if we do hedge on the DAX, upsides and downside targets are fairly straightforward. That high, we've got a monthly high, which is 175 to 200 ADR to the upside. Downside, we're looking for the gap fill. And then yesterday's low, which is 100 ADR. So if we do get hedged, or if I do get hedged on this, targets are going to be in the gap fill for me, the downside, which is just shy of ADR. Upside, I'll see how the market's going, but there's a good chance we're going to get a reaction off of the weekly high. If it breaks through that, though, we've got to move up to there. But bear in mind, we've got two major news events coming out at 2:45, CAD interest rates and the PMI for the US. So the market as a whole isn't going to do a lot today until we get that CAD interest rate figure. So I suspect that the best I can hope for is TP1 there, in which case I might even close the whole thing out today. In fact, I will do. I'm just going to move that TP2 down. So that, because that's obviously a resistance. So we're going to get a reaction off of that. And if it takes an hour for the reaction and an hour to get back up again, the New York Open's coming and so's the news. So the best we can hope for really is a TP1, 2R on the break today. That's just dead. So not a very profitable morning so far, but nothing much we can do. Profitable morning over here, payday today, which is good. But we'll have a look at it all later and see if we can unpick what's going on with the pound. But it's all pulling back. Look, not real. Right, have a good morning. Anything else you need to know, let me know. I will be working this morning on the EA and other stuff. And I'll be in Telegram if you need me. But I'll be back 2:20 this afternoon for New York. And tomorrow morning, same time, 7:50 for Frankfurt. Have a good day.